There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi, everyone. Today's topic is, can the little guy make money in the stock market, or is it just a wealthy person's opportunity? It's not a game, and I'm not going to call it that. The stock market is the business of businesses, and a lot of people have struggled to figure out what the heck I'm talking about. The stock market is a place where any American who has an education and knowledge about what they're doing and are not using recommendation services or gurus or social media or other places to try to have someone else tell them what to buy. You need to learn how to do this for yourself. The stock market isn't for wealthy people. It is actually for everybody who has learned how to save money, who has learned how to be patient, who has learned that there's no such thing as a get-rich-quick scheme, and that gambling is for casinos. Gambling in the stock market is very risky, and that is why a lot of people who try to trade the stock market or invest in the stock market lose money, because they're not investing or trading for income, but they're gambling, hoping to get rich quick. They're using the stock market as if it's a lottery ticket. It is not a gambling situation. Can you gamble in the market? Sure, and you will always lose. Gamblers lose most of the time. What keeps them back is an addiction to hoping that they make a little bit of money once in a while they lose. It's a game. The stock market isn't a game. We learned that with GameStop. That was a very, very dangerous thing to do. The retail crowd called Reddit was risking a lot of money, and they lost. Did huge hedge funds lose money? Think about it. They have billions of dollars, and they're very smart. And if they weren't very smart, they'd be out of business really fast. When they sell short and they see it go against them, they get out of that position as rapidly as possible by buying to cover. They're not holding for weeks and weeks and months and months. This isn't a movie. This is real life. And when you're investing or trading in a stock, you're investing in a company. You are owning a part of that company. Even if you only trade it for a few days, there's an ownership. You own something. It's an asset. When you gamble at the casinos, there's no assets. There's nothing that you own. You're just putting your money on the table, grabbing a couple cards you do not own, and hoping the cards come up in your favor. There is nothing remotely about the stock market that has anything to do with gambling, except that people try to get rich quick and lose their money. It doesn't have to be like this. If you want to be a little guy who makes it big in the market, you have to first start with what you don't know. And what you don't know is a lot. It's not impossible to learn. It's really easy to learn if you stick with it and you learn in a proper methodology. That's why my courses are called the Methodology Essentials for the Stock Market, because it gives you all the essentials, information, and all the methodology you need to be consistently successful, whether you invest long-term or trade for monthly income. A lot of you are out of work. A lot of you are looking to change a job. Some of you are getting out of college. Some of you are retiring. There are two opportunities in the stock market. You can invest long-term, and you can do what the IRS calls trading as a business. Trading as a business that was established in the early 2000s by the IRS gives the average retail trader the same tax status as a professional trader. And a lot of you think, oh man, these guys, they make money overnight. They get rich all the time, really fast. No, they don't. A senior floor trader has spent 4 or 6 years in college getting a financial degree, and then they spend another 4 to 10 years learning to trade stocks on the floor. There's no instant overnight success. There's no instant get rich quick thing. It's not the lottery. It's not a casino. It's not. And I know some of you will say, oh, you sure it is, sure it is. You try to make it that, and then when you lose money, you get angry. And that's not fair to the rest of us. Wealthy people didn't start out wealthy most of the time. They either started out starting a small business, and then it went public, and then it grew and grew and grew. And finally, they decide, like Jeff Bezos, that he's had enough and it's time to retire out of Amazon. But he didn't start out a wealthy man. He had to build it. Steve Jobs wasn't a wealthy man when he started. Eventually, it became big, but it was many, many years. And the wealthy of the United States are former businessmen who started a small company and grew it into a big company and then retired. Even the big wealthy families, the Kennedys, the Rockefellers, the Vanderbilts, and all the others that you've heard about, Carnegie, JP Morgan, they were businessmen first. They grew a company, they grew their business, they made a lot of money, and then they were also investors as they retired and grew, and they had this money to invest. But they all started out with not much to begin with. Yes, their inheritors inherit wealth, but they don't know anything about how to invest or trade in stocks. They just turn their money over to a money manager who charges them a huge amount of money and manages their fund or trust for them. They're not involved in the stock market. The wealthy people, the super wealthy people, the inheritors of all the great men who came before and built big businesses and established a fortune for their inheritors. The people that are inheriting that money, they don't invest in the market. They have somebody do it for them. And they don't care. And they're not trying to stop you from investing in the market. They don't even think about the market because they have money. You have to do what all those great men did in the past. You have to start looking at the market as a business that is involved in the businesses, the largest corporations to the smallest IPOs that we have. There are 5,400 stocks and issues trading on the stock exchanges right now. There are 2,500 ETFs. There's a lot of opportunities in the stock market. You don't need to learn about commodities. You don't need to learn about currency trading. You don't need to learn about trying to trade Bitcoin. You don't need to go to all that trouble. All you need to do is learn to trade on the stock market, because the stock market has every other financial market in an instrument trading on the exchanges. That makes it simple and easy. But you have to have the right education. A lot of new investors think that all they need to do is open a retail broker app on their smartphone, and then they just say, buy this or buy that, and then instantly they're going to have money in their pocket. It doesn't work that way. Everybody has to work hard for it. Those who become wealthy through the stock market started out usually with a small amount of money, and they carefully cultured it by watching and seeing how the businesses were growing, what new technologies were coming out, which company was leading, which one had great CEOs, because the CEO is critically important to the success of a company, and learning about the business before they buy it. When a retail investor or retail trader loses money in the market, it is damaging for everybody. Nobody wants retail investors and retail traders to lose money. And one of the myths that perpetuates is if someone is buying and making money and someone is selling, somebody is losing money. That's not true. When the market is trending up nicely, and it has been trending up, and we have a lot of stocks moving up out of platforms or trading ranges like we do now, somebody can buy a stock, hold it for a while, and turn around and sell it, make a profit. And somebody else could buy it for a long-term investment, and 5 years down the road, they have made a huge profit. It's not a win-lose situation. It's not a zero-sum game. I'm sorry, but that is all false misinformation. It is something that you need to toss aside, and you really need to get out of the social media stuff, because there's nothing there that is factual at all. It's all influencers, manipulators trying to tell you something that is not true. And you need to start thinking about how you need to learn before you buy. If you learn what you need to know before you buy a stock, whether it's for long-term investing or short-term trading, you will be successful. But most of you are very impatient, and all you want to do is just have somebody tell you what stock to buy, and suddenly it goes up and you make a lot of money. It doesn't work that way. It does not work that way. You have to learn how to invest and trade, even if you have a financial planner, even if you have a money manager, even if you are a successful business owner and you have a small business or a medium-sized business and you want to invest in the market, or if you're a doctor or a nurse or a teacher, if you're a bus driver, if you're a truck driver, if you're a delivery person for Amazon, all of you can participate in the market. But you have to start with the basics. You can't just jump into a race car and race the Indy 500, can you? You have to learn how to drive a Indy 500 car. You can't just start and go get a huge 100-foot yacht and jump into it and pilot it around the world. You have to start with smaller boats and take pilot lessons and get your certificates. Everything has a starting point. We don't start our children in school in the first grade with complex math. We start with the basics. And that's where you need to start, because we don't teach stock market information in our schools. And that's unfortunate, but that is also intentional, because the financial market makes money on you when you don't know what you're doing. They want you to invest in mutual funds. They want you to invest in pension funds. They want you to just pick what they have chosen for you. The recommendation services want you to buy their stock so the stock will go up and they can make money. So when you don't know what you're doing, they can take advantage of you, because they are trying to get you to invest with them or give your money to them so that they can make money from your money. Makes sense, right? When you have an education like what I teach, you will have all the information you need, and even if you continue to use a financial planner or a money manager, you will have a better idea. What do you think Bill Gates does when he walks into his money manager for his trust account? Does he just hand over his money and say, "Here, just go invest it someplace for me"? No. He goes in and he says, "I want you to invest in this company. I want you to invest in that company," because he knows what he's talking about. He took Microsoft from a scribble on a napkin in a restaurant to a many billions of dollars company. Big blue chip. Huge. Gigantic. He started with very little, and he became one of the wealthiest billionaires in the world for many, many years. But he didn't start out that way. He didn't just buy a stock and suddenly he was a billionaire. Get real. Come back to planet Earth. Get off the social media. It's hurting you. It's causing you to lose money. Get rid of the social media. It is worthless. Stop joining all these clubs and groups. Do you know that professional traders don't have groupies? Do you know that they trade independently? And they don't go around bragging about it? They just take their money to the bank. When you have to brag, you are not an investor or a retail trader. You are trying to show off for other people. You can't eat a brag. You can't eat showing off. You can't pay your bills with that. People who are making money in the market, you don't ever hear about. You don't ever see them because they're invisible, because they want to be that way. You need to start looking at the market as a business enterprise. You need to look at it as something that will help you retire when you wish to retire, because you'll have plenty of money to do so. Because there's no other way to do this if you're just an hourly wage earner. You need to have some sort of investment. You can invest in real estate, which is tricky. You can invest in REITs, which is easier. You can invest in a small business, which is a lot of hard work. Or you can learn how to invest in businesses that already exist and are making money, and you can invest or trade them. You can do many types of investments. You can buy annuities, but upon your death, that annuity value goes back to the insurance company. It doesn't go to your inheritors, so they lose out. Remember that. You can invest in a venture capital. You could be a venture capitalist, but that's very high risk. It's better to invest in the stock market, where wise people have already determined that these companies are strong and can grow. There are many things you can invest in, but the stock market is the easiest place to invest. It is a format that allows anyone who wants to, who has the desire to learn and the willingness to be patient and work at it, to be financially secure. It isn't something that happens overnight. It isn't something that you're going to just instantly know how to do. It takes practice, it takes skills, and it takes patience. If you're an impatient person, if you just want to get rich quick, then go to the casinos. Stop hurting the stock market. GameStop was gambled. It was driven up artificially, and of course now it's collapsing back down. This is harmful to GameStop, the company, It is horribly hard for the people who bought the stock at $400 or $500 and are now losing everything. It may destroy Robinhood the broker, and a lot of you probably hate Robinhood the broker, but let's get real here. When you open a broker's account, they ask you a bunch of questions, and you fill out the form, and then they ask you to read the contract and sign it. Did you read the broker contract carefully and completely? It was kind of long, because in that contract, it states that it can change margin at any time. It states that it can halt trading on a stock if it's too volatile. It states all of the parameters and requirements and rules and regulations under which you trade or invest via that broker. The broker is just a portal. They're not the stock market. They're just a way that you get your order to the market or get your order filled. They're not hedge funds. They're not anything more than a portal. They're a way for you to connect to the stock market. Legally, Robinhood is in trouble only for selling its customer orders to another company to profit from. But they are not in trouble for halting the trading that went volatile and would have caused them to go bankrupt. If you don't know already before you invest or trade that a stock can be halted at any time during extreme stress and volatile conditions, you didn't have the knowledge to be buying that stock in the first place. Everybody knows that has an education and that is making profits and great income from the market. Everybody knows that the SEC can halt or stall or put curbs in to slow down the selling. Everybody knows that. Why didn't you? Because you didn't read your contract, did you? The stock market is the business of businesses. It has rules, it has regulations, it has governing bodies, the SEC and FINRA. It has a lot of things that you can and cannot do, and you need to know what those are. If you were shocked that Robinhood could halt trading on an overly volatile stock that was plummeting, then you should never have bought that stock in the first place, because everybody else knows this rule. Everybody else knows this fact. That's what protects the brokers from going bankrupt when the stock is collapsing and they're going to have to buy the stock so you can sell it. They're not in this market to get you rich. They're not being a broker so that you can just sit back and roll in the dough and you don't have to do anything. You don't have to learn anything. You don't have to read anything. You just buy a stock and instantly you're wealthy. The brokers are there for one thing: to make money, just like you are in the stock market by providing services to you, the online and the internet. They define clearly what their responsibilities and obligations to you are, and the SEC and FINRA constantly monitor the brokers and fine them if they don't do what they're supposed to do. But your obligation or responsibility is to understand what they can do legally. And so being all angry and upset because they halted the GameStop stock from trading for a few hours, you shouldn't be angry. You should have known that was going to happen. If you didn't know, what the heck are you doing buying that stock? Or any stock? Gambling, it causes a lot of problems in the market, and it makes a lot of retail traders so very angry. But it's not the fault of the stock market. It's the fault of the retail gamblers. They caused the problem. They caused your losses. Retail traders and that guru who's leading that Reddit group, they are the guilty party. And I assure you that the SEC is going to find out who it is, and they're going to find something that they did that was illegal, and then they're going to go to prison. It may take a few years, and everybody will have long forgotten about GameStop and all this stuff because they forgot about the flash crash and the guy who did that and who was fined and fired and everything else. It was an accident, but he still got fined. The company he worked for got fined, and he got laid off. He got fired for doing it. Everybody forgets about the other times when there has been crisis or gambling or huge speculation in the market. It goes on intermittently, periodically. And a lot of times it's caused by retail gurus who get a group of people together and they buy frenetically. You don't want to be a party to illegal action. The stock market will move up. The stock market will trend up. It trends up most of the time in a long-term bull market. Bear markets are very brief. Sometimes they're super short. Sometimes they take 2 or 3 years. But you can still make money even in those markets. But if you go in and you know nothing about what you're doing other than somebody told you to buy this stock, then you have to accept the consequences of your decisions. You decided to buy a stock you know nothing about. You decided to participate in a gambling situation. You decided that you would put your money at huge risk and you lost. It's your decision that caused the loss. Whenever there is huge volatility, whenever the markets are stressed, there are curves, automatic computer-generated programs that pause the stock decline, because usually it's a stock decline. Sometimes it's a rise, but not very often. And if you go to GameStop and you look on those days when it was going down and everybody was all in an uproar because Robinhood stopped it, well, the SEC's curves were already pausing it. 5 minutes pause, then it would plummet again. 5-minute pause, then it would plummet again. There are many, many times during the day on the exchanges when GameStop was stalled and halted trading because it was falling too fast. This is part of the protection process to slow down the selling panic mode and the VWAP orders, the volume weighted at average price, that cause the stock market to plummet. You can't use those kinds of orders. So it wasn't just Robinhood that halted the trading. It was other brokers, and it was the exchanges, computers, halting the action on GME because it was falling too rapidly. Whenever a stock starts falling so fast like that, these automatic computer programs will trigger pauses, 2 minutes, 5 minutes, where there's no trading going on at all. You should know this stuff. If you're trading stocks, if you're investing, why don't you know this stuff? Because you haven't come to my website and you haven't taken one of my courses. If you took one of my courses, you would know all this stuff, and you would never be caught in a maelstrom, a downtrend where you're losing tons of money for no good reason. You would never invest in a stock with such high risk. Yes, there was an entry for GameStop, but it wasn't at $300 or $200 or $500. It was at $17. And if you had gotten in at that point, like my students, some of my students, you could have sold a stock for $200 or $300, not $500, but a couple hundred, and made a tidy profit in a few days. But just racing to buy because the stock is moving up hundreds of dollars is a good way to lose all your money. And if you're doing margin, you most certainly have. I teach you about margin. I teach you about all the rules and regulations. I teach you what you need to know to be consistently successful. Every morning I get up and I start writing my market open report and my market condition report so that my students know what's going on every day. I talk about a couple of stocks. I explain what's going on. I show them examples and things. So every day they have opportunities to study. And that's why they're successful. So if you're not a gambler, if you really want to be successful, if you want to have the American dream of being financially independent and financially secure, if you want to join the wealthy people, because they're not stopping you. They don't care whether you become wealthy or not. More money, the merrier. Come to my website. Peruse the 3 courses that I have. If you're a brand new beginner, they're standard. If you have some experience, a little further along, then the premier. Or if you have many years of trading and you're still struggling, there's the elite. There's also a full retirement course for those of you who are just investing and study the outlines and things. And if you find that this looks like it's right for you, then give us a call. If not, good luck. This is the radio show for this week. Thank you for listening.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.